when you dig a bit deeper, what you find is that the inflammatory messages tend to run harder. Lies run harder than truth. Extreme positions run harder in cyberspace on X and through the ecosystem. And, even I notice in times of success, like just of late with our company's never been more successful. And yet the amount of hate and toxicity like that gets posted online has never been greater. And then I'll drill down on some of these, on the people posting, all the negativity and the hate and the criticism. And here's what I see oftentimes. I see it's a person that's never interacted with anybody before, and they have 328 followers, and they share none with me. And I look a little bit, and I'm like, this is not even a person. Mm-hmm. This is a bot. And it turns out, I think, that a lot of the toxic inflammatory behavior online is actually cyber marketing or guerrilla marketing. Like a short seller in my stock has actually paid a digital marketing organization to spin up a bunch of bots to post a bunch of nasty, awful, skeptical cynicism because they think it might work. And it's very transparent to me that someone paid some money to create the appearance of a protest.
Wow.
And I think if you take this in the political realm, same thing. A lot of times the political inflammation is someone paid a digital bot to create the appearance of unhappiness.
To manipulate it.
Back to the channel, Aaron here from the Bitcoin Bros. I hope that you're having a great Saturday. And you just saw in that clip that was Michael Saylor talking about how the stock market could be manipulated by AI bots on Twitter and other news feeds around these social media platforms. And this could cause the price of strategy to go down. And strategy is not the only stock that this happens to. This happens to all the other Mag 7 stocks out there. But he's just saying like, hey, I'm seeing some weird manipulation coming from social media where people may be getting paid to promote FUD, fear, uncertainty, and doubt, and that could definitely cause the stock price to drop. So nothing has changed with strategy. They're still acquiring more Bitcoin. Bitcoin per share is going up. So as MNAV contracts, that could be a great buy, the dip opportunity. Not financial advice, but looking at strategy here right now, price is around 344. And one thing that's really interesting here on the strategy website, you can see the live statistics for STRD, STRK, STRC, and STRF. And the statistic that really stands out to me is the trading volume here. You can see STRF had a $9 million of trading volume on Friday, and the average trading volume for STRF is around 20 million. STRC, you can see, was around 28. Average daily trading volume is around 60 million. STRK, you can see all these different products that they have. So you can see when demand is going up and when demand is going down. And in today's video, we're really going to be talking about these perpetual products, how Saylor is attacking the fixed income market, and he's trying to get more money to flow into these products so that strategy can buy more Bitcoin. And I have a couple clips to play for you that we're going to be looking at here in 1 second, but understand that STRF, STRC, STRK, and STRD are not on Robinhood as of yet. Robinhood is probably the biggest stock trading platform, especially for retail traders today. And their user base is growing exponentially, and it's probably not going to slow down anytime soon. And then once these products are on Robinhood, you should expect to see serious flows and a potential rally. And there's a couple clips here that I'll play for you guys from Saylor where he talks about, would people rather have their money in a bank account not earning any interest, or a money market account that's not making much interest, or in a product like STRF, STRC, STRK, STRD? And he's talking about how nobody knows that this is happening right now, how Strategy and the rest of these other Bitcoin treasury companies are changing the face of finance right now. And let's just go ahead and play these clips. I'll let Saylor explain it himself.
Let's do an audience poll. How many people in the audience have a bank account with cash in it? Raise your hand. How many people have their money in a bank account in some kind of money market that yields more than 3%? 4%, 5%. You have a bank that yields 5%, 6%? Where do you keep your money? I just want to know. We appreciate it. Bye. Okay, just a quick second question. How many of you would like it if your bank gave you 10%? Okay. How many people actually own an ETF that's a fixed income ETF like PFF or any kind of corporate credit ETF that generates yield? Raise your hand. Interesting.
Very few.
How many people own any corporate bonds directly? Ooh. By the way, how many people own equity, like any kind of common equity, like a 4-letter ticker equity? So it seems like, by the way, the magic thing is to take the bank account idea, crank up the yield, and put it in the equity. We're on the verge of the creation of a digital credit market that right now it looks like 20, 30 billion a year. By the way, I'm going to throw that, that's a throwaway. It's 30 billion a year and no one's noticed it exists yet. It's 30 billion a year. And the Wall Street Journal and the New York Times and Forbes, they haven't noticed it exists yet. But we're about to go to 50 billion and 100 billion and 200 billion. And so think about $1 trillion of credit. And when it's $1 trillion of credit, it's not 1% of the credit in the world. And people still don't notice it exists. And so the real opportunity for all these companies is to issue billions, then tens of billions, then hundreds of billions of digital credit. And
so as you can see, what Saylor was explaining in those clips, these Bitcoin treasury companies are basically trying to replace the banks with Bitcoin-backed banks, stripping the performance off of Bitcoin and giving it to these perpetual investors. The 8, 9, 10% a year dividend that you would get versus what you're getting in a high yield savings account at a bank or a money market account. So that is where they're really trying to change the game. And right now, nobody knows this is happening. It's still very early. These products are still classified as junk bonds, and eventually they'll become AAA rated potentially as years come and as they have more credibility and as more money flows into these products. And as time goes on, they'll get more credibility and people will start to understand what Strategy's doing, what Metaplanet's doing, what a lot of these other companies are actually doing, and they'll park some of their money there just for the easy 8, 9, 10% yield. But outside of that, if we look at the most actively traded US stocks here, on Friday, Strategy is still up here at around $6.1 billion of actively traded volume. Definitely good to see that they're still around the top 20 almost every single day in trading volume. And the company is back up to 105 in the top US market cap companies. We fell down to around 120 there. We popped back up to 344. Now we're back almost in the top 100 again. This is important because Strategy does qualify for the S&P 500. They have not been included yet. The next date to pay attention to is December 8th. Once they're included, the funds that track the S&P will buy shares of Strategy based on their allocation percentage. As they climb up this rank here, if they go up to spot 50 in the top 100 market cap companies in the US, their allocation percent will be bigger in the S&P 500, which would be better for the MNAV or better for the price. But outside of Strategy, looking at the Bitcoin ETF flows on Friday, we had another $222 million of money coming into the Bitcoin ETFs. That's good to see. You guys know currently around 450 Bitcoin are mined a day. That's around 40 to $50 million of demand that comes onto the market from the miners every single day. And that's getting bought up plus some by the ETFs. As you can see here, they bought a decent amount of Bitcoin in the past week, and the week before that was even bigger. So there is just a increasingly smaller amount of Bitcoin that is going to be left available for sale. So eventually we're going to have a supply shock for Bitcoin where the price is going to have to go up because there's just not enough BTC left. And checking out this chart here, this is the Bitcoin ETFs. When it's above this red line right here, this is the number of Bitcoin mined per day. When it gets above this red line, that's when the Bitcoin ETFs are buying more Bitcoin than are being mined every single day. But one thing I want to just point out here, look at the flow of the Bitcoin ETFs. When the ETFs are buying a lot of Bitcoin, look at what happens to the price of BTC. When the ETFs start to potentially sell off Bitcoin, or it pauses a little bit, Bitcoin goes down or traded sideways. But when it starts to go back up, you see Bitcoin go back up. Right now, it went down. The Bitcoin ETFs went down a little bit. They weren't really buying as much. Got negative there for a little bit. Bitcoin kind of traded sideways. Now we're going back up. More money starting to flow back in. If we start to see it go up, like what we saw here in the past, Bitcoin's price is probably going to go up and break into new all-time highs. So that's something to pay attention to there. And then just some quick updates from the past couple of days. Remix Point bought another 77 Bitcoin. So Remix Point is a Japan company, and they now hold around 1,300 BTC. Good to see there. And then Treasury BTC, this is a European company. They acquired another 111 Bitcoin. They now hold 1.1K BTC. That is really good to see. And then guys, I talked about that 450 Bitcoin that is coming from the miners every single day. But no, a lot of these miners that are mining the Bitcoin, they're holding some of the Bitcoin that they mine for the long term. As you can see right here, Kango. This week, Kango mined 149 new Bitcoin, bringing their total holdings to 5,567.3 BTC. So just because we say that 450 Bitcoin is mined today does not mean that's 450 Bitcoin going onto the market from the miners, because a lot of these miners are holding their Bitcoin. Marathon, one of the biggest miners in the US, they hold over 50,000 Bitcoin, and they continue to hold more Bitcoin over time. So these miners, they're selling, yes, but they're also holding a lot of the BTC that they mine as well for long-term storage, because they believe Bitcoin's price will be higher than it is right now in the future. So that's all I had for today's video. Hope you enjoyed, found some value. If you did, make sure to hit that like button. My name is Aaron from the Bitcoin Bros. Subscribe for more. We have new content coming out every single day covering Bitcoin strategy and the rest of the market. So thank you for watching all the way to the end, and I'll catch you in the next one.